Circle raises $222 million to build its own blockchain. USDC issuer Circle is eyeing a new strategy. It wants to provide the ideal blockchain for financial institutions, a move that has restored market confidence following a sharp decline in the company's valuation. The latest initiative from CEO Jeremy Allaire is ARC, a new network built from the ground up to serve banks and financial players. Raising $222 million in a private token presale, Circle locked in a $3 billion valuation with an investor lineup that included BlackRock, Apollo Funds, a 16Z Crypto, ARK Invest, Bullish, Han Ventures, Intercontinental Exchange, and Standard Chartered Ventures. The $3 billion valuation places ARK among the most ambitious blockchain infrastructure bets of the year, at a time when institutional appetite for compliant on-chain rails is growing fast. Circle built its name as a key partner on the Ethereum network and manages one of the most popular stablecoins in the world, yet Allaire has never been satisfied with a limited role in blockchain infrastructure. With ARK, Circle shifts from issuing assets on other chains to owning the network itself, a transition that offers banks better compliance tools while keeping fees both simple and cheap. The ARC token works much like ETH does for its own network, serving as the core asset for a system built to bring financial institutions directly onto the chain. The research firm Bernstein kept its $190 price target after the Q1 report because the company hit $151 million in EBITDA, beating market expectations by 10% and growing USDC transactions by 260% in a year. While the numbers were strong, there was a small gap since Circle missed revenue goals by 3%, right as the company shared its technical plans in the ARK white paper released on Monday. Circle is moving from stablecoin issuer to blockchain landlords, and institutional finance may never look the same. After sale rumors, strategy buys more Bitcoin. Michael Saylor spent the vast majority of his career telling retail traders to never sell their Bitcoin, but that narrative is now being questioned. The strategy chairman shared during the company's Q1 earnings call that we'll probably sell some Bitcoin to fund a dividend, just to inoculate the market, just to send the message that we did it, a statement that infuriated a significant portion of Bitcoin, MSTR, STRC, and STRK holders. The strategy chairman shared during the company's Q1 earnings call that we'll probably sell some Bitcoin to fund a dividend, just to inoculate the market, just to send the message that we did it, a statement that infuriated a significant portion of Bitcoin, MSTR, STRC, and STRK holders. Strategy CEO Phong Le, in an interview, said the company would only liquidate Bitcoin if it was in the best interest of shareholders, but set no deadline or target. The pushback came quickly, with the broader Bitcoin community alarmed by the idea of one of its largest holders signaling a willingness to sell, sending strategy shares down. In an interview with Fortune magazine, Saylor walked back the market's interpretation of his comments, saying his words were only a response to company critics and that strategy would never sell to reach a net zero position. 6 days later, the company filed with the SEC confirming the purchase of 535 Bitcoin for $43 million, making clear the buying continues. Saylor suggested the direction would remain firmly on the buying side, setting a ratio of 20 purchases for every one sale. As an example, the situation remains delicate for strategy, which carries massive unrealized losses on its balance sheet. For now, the market is showing some optimism. Bitcoin has recovered to $82,000, even if only for a brief period, following an extended time of market pressure. This recovery pushed the company's stock up 12% over the last 30 days. Saylor floated a sale, walked it back, and then bought more Bitcoin anyway, leaving strategy's conviction intact, but its messaging in question. Saylor floated a sale, walked it back, and then bought more Bitcoin anyway, leaving strategy's conviction intact, but its messaging in question. Pokemon cards are the hottest collectibles right now. The crypto market has long placed its bets on NFTs as the great driver of digital collectibles. But what has quietly returned over 4,000% in recent years are cards from one of the most beloved anime franchises in the world, Pokemon. For those holding rare cards, the market can translate into thousands of dollars on the secondary market. Despite having its acquisition bid for eBay denied, GameStop has been making significant revenue selling assorted Pokemon card packs, with some reaching up to $5,000. Celebrities like Logan Paul, Justin Bieber, and DJ Steve Aoki have been buying them as investments, the same way others allocate capital into watches and classic cars. Analysts and collectors find the trend remarkable because these assets are gaining value despite high interest rates and global instability, conditions that usually push investors toward traditional safe havens. Peter Earle, Director of Economics and Economic Freedom, noted that Pokemon cards have returned 800% since 2004, a massive jump that has many wondering if the cards are a viable long-term investment. A market that survives macroeconomic uncertainty and the low liquidity of non-traditional assets has every potential to become an enduring one, much like baseball cards. The Japanese franchise is one of the most established in the world and is not leaving the minds of millennial and Gen Z consumers anytime soon. Pokémon cards have outlasted NFT hype, outperformed traditional safe havens, and turned childhood nostalgia into one of the most unexpected asset classes of the decade. Hacker returns 90% of stolen funds. The Arbitrum ecosystem has been dealing with constant hacks, and the bad news just keeps coming. This time it was the DeFi protocol Renegade Fi, which confirmed on Twitter that it lost $209,000 in an attack, though the outcome for depositors was actually better than expected. In this instance, the hacker accepted the protocol's terms and returned 90% of the funds in exchange for not being prosecuted. This type of hacker is what the information security market calls a white hat hacker, someone who seeks out vulnerabilities, exploits a protocol, withdraws funds, but returns them in exchange for a fee as a reward for identifying the problems. This allows the protocol to patch the vulnerability before a less generous attacker can exploit it. The practice sits in a gray area within the crypto community. On one side, parts of the DeFi market actively encourage it through bounty hunter programs, structured frameworks where hackers are formally rewarded for reporting vulnerabilities before bad actors can exploit them. On the other side, critics argue that returning funds after an unauthorized exploit should not be treated as a service. In this case, the hacker operated outside any formal program entirely, making the return of funds a unilateral decision rather than an agreed arrangement. The Arbitrum L2 community now hopes to see fewer disruptive events and to continue working on the restructuring of its architecture and aligned pools like Renegade, but without the setbacks that have defined recent months. Kevin Warsh is the change at the Fed. After a long period spent criticizing the high interest rates maintained by former Chair Jerome Powell, Donald Trump now faces a different Federal Reserve, one led by Kevin Warsh following the end of Powell's term. As an appointee of the president, Warsh supports a gradual reduction in interest rates because he believes macroeconomic data justifies the shift, even if inflation remains difficult to bring under full control. Conflict in the Strait of Hormuz involving Iran has made the task of stabilizing prices significantly harder, especially as unemployment numbers began to rise in the latest FOMC reports. This creates a combination of economic factors that no Federal Reserve official wants to manage. While analysts and Fed staff suggest that a rate cut might not happen right away, the leadership change fuels expectations for more liquidity in the coming months. Such an outlook brings renewed optimism to investors across both stock and crypto markets. Money matters because, thanks, the Coin Bureau News Team.